All right. Well, welcome to our Meet the Lenders. It's May 10th, 2024. I'd ask for those that are participating in non-lenders, if you want to mute and just go off camera, that would definitely mute, and I will mute you. But if you want to go off camera, that's totally fine. That allows people to know who the lenders are. We will have time for questions throughout this presentation. My name is Brandon Alfley. I'm the director of the South San Diego SBDC. If you do have a question, I would ask you just to put it in the chat, and I'll make sure to get to it. And we can decide how to verbalize it from there. Over the next hour, we're going to talk to several lenders. We have about a half a dozen lenders on this call that are going to range from anyone from a microloan all the way up to mid-tier financing for larger companies and everything in between. We also have Lucy Montgomery from the SBA. Overall, the Small Business Development Center, who I work for, provides free technical assistance to people that, like yourself, looking to start or grow your business. Anything from financing to HR to marketing, you name it, we provide that through this type of training, in person, online, on demand, as well as one-on-one advising. If you're interested in more information, I'll put my information into the chat, and you can always click on our website like you did to get here today. So without further ado, I'd like to introduce Lucy Montgomery from the SBA. We're delighted to have a very active and engaging SBA office here in San Diego. And Lucy is actually on our premise here, which is honestly not unusual for her to have a physical presence in our neighborhood. And Lucy, thank you so much for giving us your time this morning. Kick it off.
Thank you. Thank you so much. I would take a look. Hopefully you can see my slides here. Let's get going. Oh, perfect. I'm Lucy Montgomery from your local SBA office, and I am so happy that you found this presentation. For over 70 years, the SBA helps you start, grow, expand, and recover your business. Basically, what we do is support you by any means that we can. And one way we do that is through access to capital. And that's why we're talking today. And I want to clear up a little bit of misconception about what the SBA does in the lending area. And what we do is we guarantee loans with SBA-backed loans. We help with private investors, research and development awarded funds, and these are called SBIRs, and surety bonds. But how we do that may be a little bit unclear. We're going to talk today about lending, and we have very, very honored to have some very good lenders on this call today. We know all of them, and we're real happy for the SBDC for getting them together. How an SBA guaranteed loan is we work in the background. So you don't contact SBA. You contact one of these lenders or a lender from our lender list, and you do the underwriting with the lender. You get the loan and it goes straight to the small business. And hopefully you never really know or get to communicate with SBA directly. So you can use these SBA loans for quite a number of things, but why do we guarantee them? What is the reason? And the reason is because we find that small businesses need a little more competitive terms, lower down payments, flexible overhead requirements, and they could use a bit of counseling and education that people who are all ready to be big banked may not need. And so we're hoping to support small business by letting the lenders maybe be a little more flexible in giving loans, and they will if we guarantee a portion of it. You can use them, as I mentioned, for quite a bit of things, including launch, growing, repairing, accessing revolving credit. You can expand your facilities, you can purchase inventory, and you can also use it for exporting. So almost everything, but just note that each lender will have a little bit different requirements on what they are wanting you to use the loan for. And we'll talk about that today. There'll be a question regarding that. So the different sorts of SBA programs, I'm going to start with the 504 loan. You might not know, but you can purchase real estate, commercial real estate that is owner occupied with a 504 loan, meaning you can buy your building. And it's only 10% down, which is quite amazing. for the most part, and then the SBA guarantees a portion, and that's a great way to build assets in your small business. Then we have our 7A loan, which is our flagship loan, mostly for working capital. And you can get a smaller version of that in the Community Advantage loan, or you can also export again with those international trade loans. A micro loan on the far right is 50,000 and less, and you're going to find a little bit different underwriting for those types of loans. In the rain cloud here, I have disaster loans. That's the time the SBA will lend directly to you. So we had that in COVID and also with the recent floodings. If you did get a PPP loan or an EIDL loan via COVID, sorry about the background noise, I'm in the field today. Go ahead and make sure you have a My SBA loan portal. I'll tell you, it is very much improved from our previous system just a couple years ago. You are able to make online payments, and I suggest you do so as soon as possible or apply for forgiveness for your PPP. You do not want these loans sent to Treasury and have the chance that they would charge an additional fee up to 30% and also take like tax returns and stuff like that. So get on that if you got a COVID EIDL. You don't, and that might also keep you from getting additional lending if you don't take care of the requirements. So I was speaking about this, asking for forgiveness for your paycheck protection loan. If you have not already, here is the website. It's just sba.gov, PPP forgiveness. Do that ASAP. The deadline has passed and they're starting to send these to Treasury, and you do not want that. If you know what you want, you go through this and you think, I am already ready, I don't need anyone's help, you can go to SBA.gov lender match and be matched with an SBA lender in your location. But I will say, based on our lending community, which you're going to meet today, and our resource partner network here in San Diego and Imperial County, I would suggest that you skip that and go straight to your local SBDC and also any other SBA resource partner. And the reason I suggest that is because they can help you with your business plan, your expense sheets, financial statements, and try to get you ready for that yes from the lender. And we find that if you use something like, you've already found this SBDC, so I want to congratulate you for doing that, for making steps and strides with your small business by asking for help and taking the help that's available. And if you're not local to San Diego, we have 1,400 partner offices nationwide to help you. You simply go to sba.gov, local assistance. Silver lining of COVID is that our sba.gov website now is actually quite good and user friendly, and it has how you reach out to individual departments. In San Diego, here are your resource partners. The VBOT, the Veterans Business Outreach Center. We have SCORE Mentors, our award-winning Women's Business Center. And then last but not least, our SBDC Regional Center of Excellence right here in San Diego. We wouldn't be anywhere without them. And I want you to leverage their knowledge, which is more than 100 strong. Any help you need, you can find right here. So go ahead and take a little bit of photo of this so that you can learn about who can help you. And then I also want to know, today is the deadline for the Thrive program, which is an SBA free, except for your time commitment, 6-month business development program. You can apply now. Today, I just wanted to let you know because today is the last day. So if you want to go to SBA Thrive to learn more about that, go ahead. And also, I wanted to provide you with our social media account and also our district office website so that you can reach out to us and also follow along. I suggest if you're not following along on social media, you should, because that's where we're constantly communicating with you and letting you know about great programs from the SBDC and other resource partners and directly from us, like this Meet the Lenders, which I find extremely valuable to small businesses. The feedback I get from this program is 100% positive. So please take a listen to our wonderful lenders. And I thank the lenders, and I thank Brandon and the SBDC for giving me a chance to just talk a little SBA today. So I'll stop sharing my screen now. And I thank you so much for the time. Again, I'm Lucy Montgomery, and good luck on getting your loan.
Well, thank you, Lucy. That was quite a lot of information there. And if anyone needs any of that information to follow up, I'll make sure to follow up with everyone via email with that as an attachment, so you have that if you weren't able to catch it during that presentation. At this point, I'd like to turn our attention to our lenders. Again, very thrilled to have I believe 6 lenders on the call. And we're going to start off with a simple overview question to just introduce themselves quickly, give a brief overview of their loan programs and eligibility. I'm going to put the actual question in the chat so they can reference it. And then we'll go ahead and start with Andrew, then Tarek, and then go to Fernando, and then I'll take it from there.
Okay. Thank you, Brandon. So Sandra Crone, I'm Senior VP, Marble Bridge Funding Group. We're a 25-year-old now commercial finance company doing direct lending. I've been doing it for Marble Bridge for 23 and a half years. We specialize in B2B lending or business-to-business lending, or B2G lending, business-to-government lending, and we provide accounts receivable finance. So for those of you in the audience that provide a product or a service to another business or government entity, and you have to invoice and wait 30, 60, 90 days, this is what we do. We speed that up by funding your invoices typically within 24 to 48 hours, so you don't have to carry the paper for 30 or 60 or 90 days. So it's AR finance, and we also offer PO and contract finance. We work with startups and companies about $50 million a year in revenue, all industries, including contractors, engineers, janitorial, staffing, food models, consultants, import exporters, anyone who's providing a product or a service. No minimum, and I can fund up to $5 million a month. That's
Great.
it.
And then thank you. And Tarek, would you like to go next?
Sure. Good morning, everybody. Thank you, Brandon. Thank you, Lucy. My name is Tarek Ahadi. I'm a commercial loan officer at US Bank. I've been working for US Bank for 5.5 years. From our perspective, we're a full service bank, so we can assist with many different programs. So conventional lending, SBA, equipment financing, manufacturing vendor services, healthcare financing. From our perspective, we would require the business to be in operation at least 2 years. And we work closely with the CDCs. So if there's opportunities specifically for startups, then we work closely with actually one of the other speakers that will be introducing themselves this morning, Miriam Torres. So ultimately, if it doesn't kind of fit into our box, then normally we'll give an introduction to Miriam, and then she kind of holds their hand through that process. The only industry, obviously, that we don't kind of work with are marijuana and adult entertainment. Thank you.
Good morning, Fernando Ponce with Primary Funding. So we're very similar lane in what Andrew does over Marble Bridge. We're an asset-based lender. We provide invoice financing services. We do some PO financing. We also will do some asset-based lines of credit, where we'll take your components of your inventory and your receivables and allow you to draw down on that based on a certain percentage or formula. We've been in San Diego about 28 years now. We work primarily with banks and take a lot of the clients that they can't help for whatever reason. We also do a lot of bank workouts. So when you've had a relationship with a bank maybe for some time, and now the relationship has gotten a little bit rocky, sometimes they'll bring us in to provide a takeout. And then ultimately our goal is to be a bridge back to the bank, whether it's you're with the bank and we're taking you on and then taking you back at some point, or you're not quite there yet and we're going to work with you to get you to that point and make you bankable. We also will do some brokering. So we do we'll do some hard money, some SBA commercial real estate and acquisition as well. But primarily, as long as the assets are there, we're going to look at the deal. Thank you.
Awesome. Let's go to DeWitt, Juliet, and then Gustavo.
Hey everyone, I'm DeWitt with Pacific Premier Bank. I'm a Senior Vice President and manage our commercial banking division for San Diego County. We're a commercial bank headquartered in Irvine. We have branches from San Diego up to the Seattle area, so all across California, Arizona, Nevada. The lending programs that we have start as small as $50,000 and go all the way up to $100 million or more. The programs that start at $50,000, they're pretty easy to qualify for. One of the programs that goes from 50K up to 150,000, and that can either be a term loan or a line of credit, only requires business be established for a minimum of 3 years. To underwrite it, we'll just look at one tax return, so your most recent tax return, most recent financials, and a business bank statement. We won't look at personal taxes or a personal financial statement. And it just requires a credit score over 680, and that's it. We do have a couple credit products that are under 50,000 that do not require profitability. So with those, basically, if you've had a business that's been around for a few years and you have a credit score over 680, we won't even require taxes or financials if it's under 50,000. We'll just check your credit score, make sure that the business is in good standing with the Secretary of State, make sure all your entity documents are up to date. And if it is, then you should be able to obtain something smaller than 50,000. Everything over 150,000, we fully underwrite. So if a business wants, let's say a 500K line of credit, or wants to buy a bunch of equipment for $1 million, all of that will fully underwrite. And we can do everything from lines of credit, term loans, equipment financing, real estate financing, business acquisition financing, buy-ins, buyouts, or an SBA 7A lender, a 504 lender, and also participate in the state's state guaranteed loan program.
Good morning, everybody. My name is Juliet with Accessity. Accessity is a CDFI, which is a community development financial institution, and we are an alternative to the banks. So we help a lot of startup and existing businesses. We've been in business for 30 years, and we service Southern California. We go up to LA, Orange County, obviously San Diego, Riverside, San Bernardino, and Imperial Valleys. And again, we're an alternative to help businesses get started or grow their business when they're not eligible for a bank loan. Our maximum loan size is $100,000. Our minimum loan size is $300. So we're doing very micro loans here in Southern California. And I've been with the company for about 6 years. My role as a business development officer is to help you walk through the process, answer any questions, make sure you have the strongest chances of approval, and then give you feedback if you need to deposit into your account more, or if you need to show more on your taxes. I give you that feedback so that you are able to be successful in the approval process. And then we do not have a minimum FICO score, and we do soft pulls to everyone's credit once they apply. So that is a new fun change that we have made, which does not have a hard inquiry to your credit. So definitely reach out if it's something that you're interested in. I'll put my information in the chat.
Good morning. I guess I can go next, right, Brandon? So my name is Gustavo Bedard. I work for Civic Community Partners. I oversee the economic and community development initiatives for our organization, which also is a community development financial institution, which it is a nonprofit chartered by the U.S. Treasury Department. We are a lender. We don't take any deposits. So we're specialized, similar to what Juliet was talking through about Accessity. We're kind of a more lenient alternative underwriting to the financial institutions, work a little bit outside the box, if you will. We are formerly the redevelopment agency for the city of San Diego. So we are very familiar with community development lending. Dedicated to small business, we've created a program called the Building Business Success Program, which is also a no FICO driven score type product, really based more on the underwriting capacity of an individual's business for repayment. We're dedicated, we don't necessarily do startups. We want to work with minority business entities or disadvantaged business entities that have procured contracts with anchor institutions, such as, maybe a large hospital group or a school district or the Port Authority. The idea here is to help minority business owners be able to carry the burden of being paid slowly by these anchor institutions to be able to pay for their materials or hire new skill workers, if you will, and then obviously get paid back. And we provide these monies in a lump sum loan. And we are very creative when it comes to the capacity for repayment, in the sense that, we can do very flexible payment terms, where there's just interest only, deferred interest, amortized interest, which is pretty conventional. The idea here is to make it feasible for the individual to be able to get their access to working capital. Our range of loans from a dollar standpoint go from $50,000 to about $500,000, again, based on the capacity for repayment. And then, of course, if we're talking about community development, for those who may be interested, we also provide new market tax credits, mezzanine funds, gap financing on the more, strategic community development type of construction, community facilities. That may not pertain to this particular call per se, but if you're interested to learn more about that, be happy to answer some more questions offline, and I'll put my phone number and contact information on the chat as well. Thank you, Brandon.
Awesome. Thanks, Gustavo. Miriam, would you mind going next?
Good morning, everyone. So I'm with Miriam with CDC Small Business Finance. We're a part of Momentous, a family of Momentous Capital, and we are mission oriented. Our focus is really on helping anyone who is not able to get a yes at a bank, so is not able to get lending. If you're a startup business, an acquisition or an existing business, and you require non-traditional lending, then that's when we come in. If you're minority, Hispanic, African-American, women business owner, or none of those things, but you're just starting, we are happy to help. About half of our loans are startup loans. So we do, that's a lot of our expertise is and working with those newer businesses. We're a CDFI and also a CDC, and we've been around for 40 plus years. I personally have been in the industry for 20 plus years. I really work with my borrowers that if I cannot say yes right now, I try to give you a roadmap to in the future kind of be set up for what you would need to get approved. So that's through my expertise. And in addition, obviously with SBDC, there's a lot of people on their finance team that I work with on a regular basis. And together we help you to get to that point. If it's in the best interest of you and your business to get you approved and get you a loan. Our loan sizes are between $20,000 to $350,000, and they can be used for startup needs, working capital. You can refinance your debt, and you can do tenant improvements. What else can you do? You can get equipment, operating costs, a lot of different uses of proceeds that are valid through our loans. And our products. Our interest rate starts at 9.5%, and the highest it could go is at 13%. Our terms are for 10 years. And some of the stuff that I love about us is that we do not have a minimum credit score requirement, which is super great. So you won't get a decline. A little bit like Juliet, I actually do not pull credit. That's it. When you go through me, it's up to me when and if I pull credit. So I will look at your loan application and everything you've turned in, your full package, and see if I'm able to help you. If I'm not, then I will just call you and have that conversation with you. I certainly don't want to pull your credit if I can't help you. Also, before that, I'll have a conversation with you to see if we're even close. If not, I might refer you to someone on this panel or back to SBDC or both. So yeah, that's a little bit about what we do, our loan products, and the types of clients that we help.
Perfect. All right, throwing in the chat the next series of questions here, and Miriam, if you wouldn't mind, we'll just start with you. Could you go into a bit more detail about your application and process overall? What does it look like when you mention a full package from day one? How long does it typically take? What are the steps a small business should take to access capital in your organization? And then if you want to go into any special programs or business types that you guys really focus in on at CDC, we'll start with you, and then we'll work backwards, go with Gustavo, then Juliet, then DeWitt.
Sure. Yeah. So the process with me, I'm big on conversation. I definitely don't go online to our website and apply, because then your credit will be pulled automatically. And that's not something that, I believe in doing. I know that your credit's important. It's important to me. It's I'm sure important to you. So what usually happens is if you give me a call or you email me, then we schedule a call, then we talk for about 15-20 minutes about you and your business. If it looks like I'm able to help you, I'll go ahead and send you an application. If I know right off the bat that you're not meeting an important target of ours, but like, for example, maybe Tariq, can help that type of industry, or Juliet on this call can, then I would refer you to them, or Fernando. And so then after that, if I am able to help you, you go ahead and apply on our online system. And I give you a link, and you upload all of your all of your needed documents in addition to your application. And the documents that we need are actually very similar to a bank, even though we underwrite very differently. It's still going to be 1 year of your previous tax returns personally, 2 years of your business tax returns that are most current, your current profit and loss statement and balance sheet. We do look at 6 months of your business bank statements, and that's all if you're an existing business owner. If you're a new business owner, then we're looking at you hopefully having worked with already the SBDC to come up with an excellent business plan and projections. I will be looking at really the most important thing other than that would be your experience. We like to see 2 years or more in the industry or in management. If your industry is food or fitness, those are kind of riskier industries. So then we would require a little bit more time, at least 3 years of industry experience. But everything else can be pretty transferable as far as an experience if you're a startup. And in addition, we're going to be looking at your personal cash flow. I definitely advise you not to quit your day job when you're going to start your business, unless you have, a lump sum saved up, or maybe your spouse is working and you're not. At the end of the day, we're going to look to see if you want to start a business on the finance side with lending, to make sure that you can support yourself financially on the personal side. So that just kind of shows us that the money that you want to use for our loan really is for your business, if you can personally support yourself. So that's something we look at personally. That's pretty important. So once I review your application, and let's say everything looks good, we might get some last items and then send you into underwriting. I'm very proud and happy to tell you guys that underwriting on the back end has moved a lot quicker. So it's about 5 to 6 days before they give an approval out or a decline. But I work really hard to turn in loans that are approved. I do about 7 to 12 loans a month, and every month, throughout the year. And I got last year in 2023, 6 declines in the whole year. So I don't say that as a sense of pride. I say that as I really don't want to waste your time or my time. So I really work with you to help you get to that point where you get approved, of course, with the resources like SBDC, because they also know a lot of what we're looking for. So sometimes that's why I say it's not always yes, but it's, maybe yes later. So we work hard to do that and get you to the right spot. So yeah, I think that pretty much describes our process. The process can be as quick as, if you're an existing business owner, just 3 weeks. And if it's an easy use of proceeds, which would be something like working capital. If it's a startup business and it's projections based, or let's say there's tenant improvements involved, that could take 45, 60 days. So it really depends on the use of proceeds. So in other words, what you want to use the money for the loan, and then also how quick you are at responding. That those two things are pretty important. The process with me on the upfront does take a little bit longer because, like I said, the underwriting does work through it quicker. And in order for them to do that, I try to gather everything that they need to get you guys an approval. So that pretty much covers it.
So hi again, this is Gustavo. So I guess Miriam already gave you the process principles of 101 class, because she was very thorough in her explanation. I think most of us here as the lenders, we like to talk to you first before really applying for a loan, just to make sure that we have a fit. The best thing about these virtual workshop calls is that there are a number of organizations that do different types of lending. And so if for some reason you don't necessarily fit Civic Community Partners box, we are all very friendly among ourselves, and we usually recruit our assistants or our mutual assistants to make sure that we can provide the solution for you. But similar to Miriam's explanation, we'll sit down, we'll talk, we'll see what, assess your capital needs, and just to make sure we can get you the right product lending product offering. Similar to what was just described, we too have a link, so that you can apply for our loan, and we usually don't send that out until, obviously we've had this first phone call. But, in typical fashion, we will collect financials, personal financial statements, tax returns, so that we can, carefully underwrite. Many of us have already shared that we don't necessarily pull credit as a CDFI. We kind of assess the capacity for repayment, check your historicals, if you will, and just kind of assess, our underwriting decision on that. My suggestion here for the borrowers, or for those interested in accessing capital, is be prepared, because some of you already asked the question of how fast can we turn this around. We can be pretty efficient, generally speaking, if we have a complete package. So if if you don't have the necessary documentation, it does slow things down. Or if you're not very communicative with your lender, sometimes we have questions, sometimes we're missing pieces, and all that does is really cause delays. So, some of us range from, funding loans in 10 days, some fund in 4 weeks, a month. But it really is a variable dependent on, how ready you are by the financial information that's required in your application. So I think we're no different. If we have a complete application with information that we'll need to underwrite you, we can be pretty efficient. So with that said, I want to pass it on to you, Brandon. Thank you.
I think I'm going to go next. And I always love going after you guys, because you say so many valuable things of, what we're all looking for. Similarly, at Accessity, our time frame is up to you. We do a lot smaller loans. So I would say the main difference between us and Miriam at CDC is just the loan size, right? So we operate very, very similarly. We're referring deals back and forth to each other almost daily, and have a really good rapport with everyone else on this panel. So if you don't fit into one of our buckets, like Gustavo said, we're very happy to refer you out to our other trusted partners here. But our loan sizes, we have a program up to $8,000, which is our rapid loan. That's meant to be fast. It's a couple days. Then we have a program up to $25,000, which is our low documentation loan. And that is really just looking at your bank statements, your taxes, copy of your ID, and proof that you have a business filed, whether that's your entity with the Secretary of State or your fictitious business name. So that's our low documentation loan, and that one is about 2 to 3 weeks. Again, emphasis on if you have your documentation ready, and once you apply. And then our loans over $25,000 to $100,000 is a full package, meaning your current financials if you're already in business, or a business plan. And that process is you can go anywhere between 1 and 4 weeks. So typically when I talk with you, I say that our process is between 1 and 4 weeks, because again, it depends on the loan size, and it depends if you have your documentation ready. And then we do, so I didn't mention our interest rates, and I do want to touch on that. Our interest rates are 8.99% to 14.99%, and that's based on an evaluation of the risk involved in lending to you in the business. But we do have a program right now which has very limited funding left. It's a 6.99% program for businesses that are located within very specific census tracts set by the federal government. It's meant to reach the lowest income areas in Southern California. And that, again, is 6.99%. It's a loan grant program. It's for businesses that were already established as of November 6th, 2023. And then you also need to self-identify as a minority-owned business. So those are the 3 main requirements for that program at 6.99%. Other than that, our interest rates are 8.99 to 14.99. And we lend to most businesses, most industries. I would say the industries that we don't work with are mostly anything that has to do with real estate. We don't really work with contractors who are already in business, because a term loan isn't the right fit for them. So that's when I refer them to Andrew or Fernando in order to do any sort of factoring deals. And so those are industries that I see a lot that we don't lend to. Other than that, we do a lot of high risk industries, including restaurants, gyms. I have a Pilates studio I'm working with right now, salons. All of those are considered high risk. Restaurants, of course. And we do work with those businesses. And then just talk with us before you apply. Even if you go to our website, which is just accessity.org, and you click on apply and you fill out an application, we still do a soft pull to your credit. So I always recommend talking with me first. seeing what your strengths and weaknesses are, but just know if you do go to our website and fill it out directly, it is still a soft pull to your credit. So I'll stop there. Thank you.
Great. And then go ahead, do what?
All right. So with Pacific Premier Bank, the types of businesses that we work with, it's primarily going to be B2B. So if it's a B2C or business to consumer type operation, it may not be the best fit for us. We're happy to take a look at it, but most of our clients are B2B businesses that are manufacturers, distributors, contractors, professional service firms, marketing firms, construction firms. So really primarily like what we would call like commercial and industrial businesses, not very many like retail businesses, but we don't disqualify retail or restaurants. We don't disqualify them. We're also a very large hotel lender, although we're not really looking to expand on our hotel loan portfolio. The types of businesses that are truly excluded are going to be anything that's illicit. We're a federally chartered bank, so anything cannabis related, that's excluded. That's really pretty much it as far as things that are excluded. As far as what the application process looks like, so a loan or a line of credit up to $50,000 could just be as simple as filling out a 2-page application, sending it back to me. And then at that point, it gets into underwriting. We pull your credit report. We check, is the business up to all entity filings up to date? Everything's in compliance. And assuming credit scores over 680, you may get an approval in as little as a week's time. And then actually signing loan docs could be, a week from then. So start to finish, something under 50,000 should be like a 2-week process tops. Things over, so if you want over 50,000, let's say you want a 100,000 line of credit or 100,000 term loan, same application, same 2-page application, fill it out, send it back, and return it to us along with your most recent business tax return, year-to-date financials. I might need year-end financials. If you send a 2022 tax return to me, then I'll also need 2023 year-end, 2024 year-to-date, a couple months of bank statements. And then similar process, we'll pull your credit report. We'll make sure that the entity filings are up to date. But when we go above 50,000, we'll require profitability. So what that means is that we're basically checking to see, is there enough cash flow to satisfy all of your existing debt obligations and also enough cash flow to safely cover whatever the proposed new debt is that you're applying for with us, whatever the proposed new loan is that you're applying for with us. That process, it's slightly longer. It's like a 2-week process to once we get the complete application, all of the financials that we need. It's about a 2-week process to get a decision. And then from there, it's about a 1-week process to get actual loan docs signed, get everything set up. So start to finish, it could be 3 weeks, could be 4 weeks tops. And then everything above everything above 150,000, we fully underwrite. And full underwriting, that with us typically means 2 to 3 years of business tax returns, 2 to 3 years personal tax returns, couple years financial statements, year-to-date financials, personal financial statement, bank statements. So it's quite a bit more financials that are required for anything fully underwritten. The time frame on fully underwritten loans varies depending on really what our collateral is. In other words, if we're just securing the loan, if it's a $500K loan or line of credit, and we're just securing our loan with a UCC filing or a lien filing on your business, that could take as little as 30 to 45 days start to finish. If it's something like, well, it's a $500K loan, but there is no business collateral, so we're going to secure it with a second trust deed on your house or a second trust deed on a rental property. And to secure that trust deed, we actually have to do an appraisal. So that adds typically like 2 weeks, 3 weeks to the process. So if we have to appraise any collateral or get any kind of valuation or reporting done on collateral, that will extend the time frame typically by 2 weeks. So a loan like that that's fully collateralized could take 45 to 60 days. We also do SBA 7A lending. Typically, that's going to be a 60 to 90-day process, start to finish. We do 504 lending, so SBA 504 loans. Those we can do very quickly. I'm always surprised when we get a 504 loan closed faster than a conventional loan. Those could be as short as 30 days. That's definitely not the norm. The norm is probably more like 45 to 60, but depending on what a borrower's kind of time frame is, and the purchase sale agreement, whatever it dictates, we'll kind of work around that. Special programs, the only like truly special program or offering for small business that we have, so any line of credit or term loan up to 150,000, if the business does less than $1 million in revenue per the last tax return or whatever financials we collect, then we'll waive all setup fees. If a business does more than $1 million in sales, our belief is that you can afford to pay the fees then, which typically are up to 1% origination, and then anywhere from a $250 to a $750 documentation fee. One thing that I'll note, I would consider us very contractor friendly. In this kind of economic environment, some banks frankly don't even lend to contractors. It's a non-starter. Whereas Pacific Premier Bank and me personally bank some of the largest contractors in San Diego and have extended some very, very large lines of credit to a number of them. So definitely contractor friendly. And I think someone put in the chat a question about the state funding programs. And maybe that was something I referred to. It's a state guaranteed loan program. If you have more questions about it, I would reach out to the SBDC. It's basically a program very, very similar to the SBA with respect to the state's guaranteed loan program. Utilizes state money to provide a guarantee to banks where a bank might say, well, this is kind of a risky deal, we really don't want to approve it, but if the borrower agrees to enroll the loan in the state's guaranteed loan program, maybe that's enough to convince the bank to approve a loan that otherwise they would decline. So on that, if you want more information on the state's guaranteed loan program, I would just reach out to the SBDC for more info on that one. And I think that, rate-wise, so everything up to 50,000, it's probably going to be somewhere between 9.5% to 11.5%. Loans from 50,000 up to 150,000, they're going to be based off of Wall Street Journal Prime. So it'll be Wall Street Journal Prime Plus. Prime right now is 8.5%, and the margin is typically anywhere from 2 to 3 points. So a loan up to, let's say it's 150,000 line of credit, that would be, the rate on that would be anywhere from, say at the very, very low end, like 8.5%, and at the high end, probably 10.5%. Everything that's fully underwritten is completely customizable, fee-wise, rate-wise. So if it's $1 million line or a 500K line, the fees on them and the rates on them would be, kind of dependent on what the overall relationship looks like. Typically, I would say the lowest rate on like a line of credit that's above 150,000 is probably 8.5%. And typically those lines aren't going to be any more than Prime Plus 2. So 8.5 to 10.5. That's it for me.
Perfect. Do it. All right. And I think we have a couple other lenders, Fernando, Tarek, and Andrew.
Yeah,
put the-
I'll jump right in. So our process is pretty simple. AR, AP aging, copy of your contract and invoices if we're financing invoices, a copy of the PO if it's on the PO side. Any other assets that we're leveraging, it'll kind of be case by case. As far as our application process, we're typically done in about 10 business days. We approve these deals internally, so it's a pretty quick process. Special programs. I mean, I don't know that we have special programs. Something we've been doing a lot of here lately is real estate backed lines of credit. We find that a lot of businesses are pretty heavily leveraged over the past couple of years, taking on a lot of different small loans here and there, and some SBA money and different programs that are out there. And so maybe their cash flow is a little bit tight, but they have a ton of equity in their real estate, right? If you live in Southern California, it's just been doing this for years now. So we've been able to come in a second position and provide lines of credit behind your mortgage. If you're not qualifying for a traditional HELOC, of course, right? If you are, then you want to go with that. But so those are great programs that we've been able to leverage, and I guess maybe qualifies as special. It's special to me anyway. Thank you.
So some of the programs that we have, I think everyone's kind of covered off, most of them. And in terms of the requirements, so, typically if you have a full package, we can get the process moving pretty quickly. In terms of special stimulus and stuff that are in place right now, the SBA actually has a stimulus through until the end of September 2024, whereby the SBA guarantee fee on loans up to $1 million are actually waived. So you can use that through a 7(a) or 504 program to purchase commercial real estate, use it for working capital, for partner buy-ins, partner buyouts, large pieces of equipment, a whole host of different things. Typically from our side, through US Bank, we only require 1 year cash flow. And our sort of debt service coverage ratios are a lot more flexible than many other banks. So in fact, we pick up quite a lot of deals that some of the larger banks can't do. And again, as I mentioned, in terms of territorial restrictions or industry restrictions, the only ones that we won't look at are sort of adult entertainment and marijuana. We're open to almost anything else. And then if you're looking on the lower side, on kind of minimum loans of sort of up to $50,000, we can get those funded anywhere from sort of 5 to 7 business days, as long as we have a full package. We actually have online sort of application only products where you can go in and click and apply yourself, and then it will ask you to upload your information, and once you've uploaded it, then you'll be able to electronically sign your loan documentation and obviously provide your account and routing number, and the funds will be directly transferred into your account. Thank you.
Okay, last but not least. So Andrew Crone, Marble Bridge Funding Group. So in bringing in clients, I'm your first stop. I've been here 23 years. I do the sales and the underwriting. So typically within our phone call, I can figure out whether we can do this deal or not, usually to the point of 95% success. So we get into your business, we understand it, look at your needs. As mentioned earlier, and by the way, we are specialists in funding contractors. We do work with startups all the time, but since we're funding receivables, we're signing up startups that will have receivables typically within 60 days. So they'll need some funding at that particular point. We work with food industries, we work with engineers, transportation, staffing models, import-export models. Anything that's B2B, as I mentioned, in other words, providing a product service to another business or to government. We do government receivables all the time. As far as the initial call, let's say 20, 30 minutes, we figure it out. We both want to go forward. I will then send you a package, and like many of the lenders in here, if not all, we'll ask for financials. They don't have to be CPA audited, just the best you can produce. Tax returns, articles of incorporation, the usual stuff. That will set up a Zoom call with you and me, and we will walk through all your numbers and figure it out just to double check everything. At that point, I'm going to educate you because receivable finance takes some education. This is something that if you've never been exposed to, I'm going to teach you everything. And I've been doing it for hundreds of businesses for the 23 years I've been doing this. And because I've underwritten almost every type of industry out there, I even know when I look at your numbers, if they're looking like they're right or wrong. Rarely do I see a business that I haven't seen before that I can't figure it out, in a quick call and actually give you advice if I see things you're not doing right. So I try to go beyond just being a lender. I am doing some counseling, which the lenders in this group know I do. So at that point, I go, it looks good. You understand exactly how we're going to work together, all aspects. And as I mentioned earlier, we have no minimum funding requirement. And I can fund anybody up to $5 million a month. So you'll never outgrow us in the relationship time. And Fernando mentioned this about, getting you from point A to point B. Same thing with Marble Bridge. We're getting you from point B, usually to graduate. You'll either sell your business, bring in millions. Hopefully that's the case. Or you end up going to traditional bank financing or whatever you end up doing. Our goal is to help you get from point A to point B as fast as possible. So we get your package, and from the time we get your package and you say go, we say go. We'll have it underwritten in 10 days or less. You'll come up and meet us. You'll get to meet our whole team, sign, and you can bring in funding the day you signed. And we have no minimum. So if you don't need the money this month, you don't fund, you have no fees. Next month you fund, you have fees. Next month you don't fund, you don't have fees. So it's flexible. You're controlling the game, you're controlling the funding, and we're just getting you the money as fast as you need it. Typically within 24 to 48 hours, and you make a request directly wired into your bank account. That's it.
Great. And we're in on this last question. Andrew, we'll start off with you since you're so patient on the last round. Avoiding pitfalls and success strategies overall. Could you share what are the top tips for small business to avoid predatory lending traps and access capital successfully? We'll start with you, and then DeWitt, Fernando, and Juliet.
All right. Well, first thing I would say, and shout out always to the SBDC. I work with SBDCs up and down the state. This is free. All of you that are listening need to sign up if you haven't done it and get involved with your SBDC, not just to say I need a loan and to get you a finance guy, get you somebody like me. You want to be able to work with them to get the loan, but also after the loan and for as long as you need them. They have all different types of services, marketing, sales, internet. I mean, anything that you need to do to get your business stronger. So it's not just, you're meeting us today, but there's more to SBDC, and you want to stay involved and get those free hours from them to that. From our end, everybody here, we're on this panel because we're all known entities. We've all been vetted. We all know who we are. We all know each other. You should talk to everybody. That would be what I would encourage, to learn. Everyone you talk to, you'll come away with a nugget. And then when you have that information, you sort of can figure out who might be the best way to go. And it's also possible with CDFIs and Marble Bridge that we can work together. So that's a whole different discussion that's not being brought up today, but there may be a way to have more than one lender. I've been doing it for 23 years. I can guide you on that particular topic. As far as traps in the industry, all of you, if you're in business, have to be aware, I'm sure, by emails, by phone calls, by mailers. Now I'm hearing it on the radio. What I call vulture capital or MCA loans, merchant cash loan, advanced loans. This has been terrible for small business around the country. 99% of them can't handle the loans. And I've been watching them kill small business, literally go bankrupt, because the people don't understand what they're getting involved with. And these are the loans you hear, hey, we don't need any of your financials. You give us a call 24 hours later, we wire you 100,000 in your bank account. Little do you know, you're paying 30, 60, 100% interest. If you don't make profit better than that, you're just going to end up renewing the loan, getting deeper into debt, and eventually going under. So our advice at that level is don't do it. Talk to SBDC. Make sure you're feeling comfortable about where you're headed and the lender you're with. Use them as a guide to help you there. And of course, you have a CPA, you may have a lawyer, you have other people you can talk to as well, as far as guiding you into that particular or help guide you so you don't get in that particular landmine. But lenders here, none of us want to see you do it. And we all want to help you. We all give you good advice to that end. And the last thing is, when you're coming in into a lender like any of us, be aware that we all do good background checks. So you know, for me, I can do people have past bankruptcies, even if they got done 6 months ago. Doesn't stop us from going forward. So liberal wise and underwriting, I probably, and probably Fernando as well, we probably have the most liberal underwriting in the marketplace today. But that being said, there are issues out there that you got to be aware of. We will find stuff that you may not tell us. And so when I underwrite and bring you in, I close 99.5% of my deals. The ones I don't close is something wasn't disclosed and we found out afterwards. And I never want to bring you down that path if there's stuff out there to stop it. So we will have those conversations, as will the other lenders, to try to make sure we're not missing anything off the bat. So always be honest to your lenders that you're applying for. And even if your financials aren't on up to snuff, which a good portion of the ones I get are not, that doesn't stop us. We're just going to help you get better at it. And we're going to tell you things you need to do so you can get stronger and do your presentations better. And the lenders here, all of us, I'm sure, have the confidence and the knowledge to tell you what you need to do to get better. And we all want you to succeed. And that's it.
All right, and I'll be super quick. So avoiding pitfalls, successful strategies. First up, definitely reach out to the SBDC, doing what everyone's doing today and kind of meeting lenders and learning more about the process. That 100% puts you ahead of the herd and everyone else out there that, you know, is just Googling, how do I get a business line of credit? And, you know, just blindly applying on the internet, which is a terrible way to go, you know, especially if a lender has to pull your credit score. Don't apply with 10 lenders, you know, thinking, well, someone's going to approve me. And the guy or gal that pulls your credit score first, you've got a, you know, 695, and then the one that pulls it last, you've got a 679, because your score is just going to keep dropping, you know, a couple points here and there as you know, kind of have lenders pull it more and more and more and more. So what I like to do is talk to the lender first and find out, hey, what's it going to take for you to approve my request? Tell me exactly what credit score you need, exactly what you want to see on my tax returns, exactly what the requirement is. And once I speak with that lender, I'm going to have all my financials ready to go, you know, saved in a folder on my computer. Here's all my taxes for 3 years. Here's my financials. Here's my bank statements. I've got it ready to go. Once I find that lender that says, here's the requirements, here's what it takes for the approval, if I know I can meet those requirements, I'm going to send all my information to them as long as I feel comfortable with them. And, you know, hopefully that results in a higher likelihood of you getting an approval from the first person you apply with, which should be everyone's goal, right? Is find a lender that you want to work with for years, build a relationship with them, get approved, you know, right out of the gate, you know, with that first lender that you decide you want to work with. And last piece of advice, think 1 to 3 years ahead, or even 1 to 5 years ahead, and really form and build a long-term relationship with that lender, because we're, you know, not one-trick ponies. We're here to help you, you know, get your first loan, get your 5th loan, 6th loan, and would like to do business with you for years to come. That's it for me. 1 minute to spare.
Thank you. I'll jump in. So avoiding pitfalls and success strategies. I would just say in the state of California, under $500,000, if for an alternative lender, they have to show you disclosures now that shows you the true cost of capital. So make sure you're asking for this. If they're not showing it to you, they're actually you know, potentially violating some laws. But very important, because it actually shows you what you're really going to pay in the end if you use that financing facility. So that's one thing I would advise greatly. The other thing is, you know your cost of capital and your ROI. So just make sure that, you know, Andrew mentioned 100% financing rights. I've seen even higher. Just make sure that if you're using short-term working capital, if you're using something to bridge, you know, whatever that is, make sure your margins are good enough to where they can absorb the cost of capital, because that's going to be really important. That's something that we focus on as a lender. We want to look that your margins are healthy enough so that when we lend you money, it doesn't, you know, you're not losing money on the deal, right? And but so that's it for me. I apologize. I have a hard stop here at 10. I have to jump off. But thank you guys for the opportunity, and I hope to see everybody on the next one.
Thank you, Fernand. Great. If anyone, any other lender, I don't want to cut anyone off with another minute or two. You know, Juliet, Tarek, Miriam, if you want to jump in and say a couple things, feel free. We can go a couple minutes extra.
No, I think everybody kind of covered it all off, to be honest.
I agree.
Do your own research, you know, and obviously make your own calls. And, you know, every business is different. Every business's needs are different. So, you know, some may find a home with Juliet or Miriam, you know, obviously others may be a little bit more established and, you know, may want to kind of work with Jewett or myself. You know, so as I say, certainly do your research and just, you know, be aware of that kind of stuff, because, you know, I see it all the time. You know, right now, you know, as I mentioned, that SBA stimulus that's there, you know, we are refinancing a lot of SBA loans. Historically, you couldn't refinance SBA to SBA, but now we can. So, you know, a lot of business owners took SBA loans on variable rates. And right now, I mean, I've submitted 4 loans this week, you know, totaling $3.5 million. And all of those rates were, you know, previously around 6.5%, 7%, and they're now, you know, between 12 and 13%. So, you know, obviously, this is and rates aren't coming down anytime soon. I mean, you can see the announcement last week. So certainly do your own research. And obviously, if you do have a variable rate SBA loan, you know, now is the time to refinance it.
Wonderful. We're in on that. Thank you, everyone. There will be a copy of this presentation. I will email, make sure that everyone gets the recording will be on our YouTube channel. So I'll have a link to that, as also with Lucy's slides from the SBA in the beginning. Again, thank you, our lenders in particular. I know your time is super valuable. We really appreciate the support and obviously having a heart for the work that you do as well. And for everyone else, just know that on June 20th, we do have our Small Business Expo. Marisa put in into the chat the link to that, as well as our next Meet the Lenders will be on July 11th, and I put the link to that as well. All right, everyone, enjoy the rest of your Friday and have a wonderful weekend.
Thank you.